In this week's video, we're going to be talking about what has been moving the markets in the last couple of weeks, some upcoming catalysts, earnings reports, and making a strong case for the bulls and the bears for this week ahead. Since our last video, the Dow broke right through the resistance level that we charted around 31K before ending the day right around the day's high at nearly 33K. And the S&P did pretty much quite the same here, at least on the day of Friday, reversing much of Thursday's losses and kind of the way that the day started on Friday, just reversing it completely, seeing options chains looking quite like this on the SPY, which is something that is very interesting considering the fact that these returns are in the thousands, and some of these unpredictable calls that were worth almost nothing ended up being worth quite a lot, making some whopping trades. Here on the inverse side, you can see the puts ran up nearly 100% right at the beginning of the day before crashing down to about zero just before expiration. The leaderboard this past Friday showed that most sectors were going to be holding on to their gains from this past week over the weekend, and this week in particular there are a lot of earnings to be reported, especially for the S&P 500, where a great percentage of the listed companies on that index are going to be reporting their earnings, all while we are in the middle of a 2-week bull run and a lot of FUD still to be realized in the coming days ahead. This week in particular, Goldman Sachs is talking about a new idea that they think the Fed could increase the interest rates even higher than expected, leaving interest rates at about 5% come sometime next year. And that kind of sentiment in times like this kind of does make sense whenever you're seeing figures like this right here, where U.S. government bond annual returns are deeply negative, and this is for the first time in several decades. With the S&P 500 in a full bull rally over the last couple of weeks, the ETF SPY has been likewise showing aggressive charts looking like this right here, and the support trend that I've been noticing has been holding fairly well. We've been seeing it tested several times, quickly reversing back to the upside almost spontaneously. And with the market still running so hot and a lot of catalysts coming up this week, I think we could possibly see the 384 area tested again, and if we do hold that area, I think 390 to 396 could be our upside target, the low 380s to the high 370s being our low target. To make the bulls case here, if we were to see strong earnings this week as well as a less aggressive Fed outlook after this upcoming FOMC meeting, I think it's easy that we could test the 396 range, possibly even the 400 range sometime this week or next. However, if we post very poor earnings this week, as well as an outlook from the Fed after this FOMC meeting that seems more aggressive, kind of like what Goldman Sachs hinted at, possibly a 5% federal interest rate by March this coming year, we could likely see that 384 range break down, testing lower 380s to high 378s. Barron's reported in the making of this video that they expect stocks to open lower on Monday, and while this could happen, I think that we're going to see a lot of crazy up and down swings leading up to that FOMC meeting, or unless we see some bomb earnings sometime between now and then. And looking at the futures market for the S&P 500, you can see that yes, we are down about 0.34% right now. However, I do think that will probably mostly recover by the time pre-markets start, and we'll see whether or not we continue this bull run or we start a downward trend. Odds are it's going to be a volatile week, and volatility is a trader's best friend. If you're interested in learning how to trade options and leverage this volatility, we do have a video. You can go back and watch it. Otherwise, good luck, and I will see you next time.